All right, we are going to start looking at chapter 10. And chapter 10 is actually really similar to chapter 9, just on the flip side of a product. So in chapter 9, we were recording our purchase of merchandise from our vendors. And in chapter 10, we are recording our sale of the merchandise as the company. And so we want to keep track of all of our sales, and we want to keep track of all of our accounts receivables. And again, because we don't want a ton of extra accounts in our chart of accounts for the AR-XYZ company, whatever the case may be, we're going to use the same process with the sub-ledgers and the controlling account, like we did in chapter 9 with the accounts payable sub-ledgers or subsidiary accounts and the controlling account. So here our controlling account is the accounts receivable, and then we'll have sub-accounts, sub-ledger accounts for each of the companies that we sell to on account. All right. So for a company that works in merchandise, you're going to have to buy your merchandise from somebody, and then you're going to have to mark it up. Okay. And so the amount that you sell over the cost that you bought it for is the markup. Sometimes it's a percentage. Sometimes you set percentages for different kinds of products. You know, this product we're going to have a 20% markup. This product we're going to have a 50% markup. Okay, and so that's what that is. Of course, with our accounts receivable are assets. So we increase on the debit side. It's our normal balance side. Okay. And then, of course, we have the two ledgers. We have the sub-ledger posting and equaling the controlling account. Now, one thing that we are adding in at this point, it's just something new, is sales tax. So when we sell a product, there is sales tax applied. And that is not our doing, right? That's the doing of the government. Usually state and local governments work with sales tax. So if you go buy your 99-cent taco, you walk out of there paying $1.08, right? Because of sales tax. And so different cities and states have different sales tax percentages. If you go buy something at the Home Depot on 281, and then you go buy something at the Home Depot out in Universal City or Shirts, the price may be different, even though the original price may be the same. The finished complete price cost to you might be different because those are different percentages of sales tax. It'd just be a few pennies, but again, those are percentages set by those local cities. There's a state sales tax, and then your cities and counties will set sales tax percentages as well, okay? So we actually will have a whole separate column to be able to keep track of sales tax. As soon as we collect it from our customers, it becomes a payable because we now owe that back to the state or the city. And so again, it's a payable. Normal balance is a credit. Again, as soon as we collect it, it becomes a payable to us because it's just passing through our hands, and we've got to turn around and pay that to the other entities. Okay, and so you can see that there is that extra column there in the sales journal to keep track of that. Okay, we may have sales invoices, or we do have sales invoices. So we are 3 Green Products, and we are selling our product to Wells Apartments. You can see here what the totals are. We can see the sales tax added. At this point, we can see the terms of the sale. So again, we're going to have discounts. This time it'll be a sales discount because we're going to offer discounts to our customers. If they pay within 10 days, they can take a 2% discount. So we also have a column for our discount when we get to our cash receipts journal. And then if they don't pay within 10 days, they owe us the full amount, the net amount, in 30 days. Okay? All right, so here's where that discount is coming in. Oh no, this is sales tax. Sorry, discount I think is in the next section. So this is the sales tax. We're basically going to use 6% as our sales tax. So we take the original amount that they bought in product, in merchandise, multiply it times the 6%. Whatever that number is the sales tax, and we'll have to record it right up here. And then we'll add it to the original to get the amount. Oh yeah. So actually, let me point to this in the right direction. Okay. So the amount of the sale was right here, $454.50. Okay. That's the amount of product that we sold. Then we have to calculate the sales tax payable. But if this is an accounts receivable, we have to basically add these two to get what they owe us. And so it's not really like straight across the board. You kind of have to work backwards a little bit. Okay? So these two added together actually equals the accounts receivable debit. Okay? And again, here you can see sales. We know normal balance of a credit. Sales tax payable, because it's a payable as a credit. Those two credits together equal the amount of the accounts receivable. Okay? All right, so looking at the working together for 10-1, and looking at the worksheet, working papers for 10-1, it tells us we've got a sales journal, accounts receivable ledger for classic appliances, and the first thing they want us to do is start a new page for an accounts receivable ledger for Venice Cafe. It gives us the account number and it gives us a balance. So these are, again, this is our accounts receivable ledger. These are the people that are our customers, and we're going to keep track of them in this separate ledger. And they just want to get that information into this ledger. Okay, and so that's really all we're doing there. And then we're going to come down here and we're going to actually do the sales transactions for these 4 transactions in the sales journal. Okay, so I'm going to move this over here. And do remember that you have your T-sheet notes from the last lesson too that might help, because we did go ahead and add these things on here for sales. We'll get to that a little bit later. Sales tax payable is on here as well. Okay. All right. So they want us to start this new page for Venice Cafe. And it tells us that they are customer number 120. Now, again, this says customer number versus the vendor number that we saw in the accounts payable. Okay? Versus when we look at our general ledgers, it says account number. Okay? So those help you help to signal which kind of ledger you're in if you don't have the actual title at the top. Okay, and then it says that on September 1st, there was a current balance of $390.34. So for an accounts receivable, is that balance going to be a debit or a credit? What is the normal balance, right? And actually, we don't have a choice because they only give us one option. So $390.34. Okay. And that's all they wanted us to do in that first step. Then for number 2, it says use the current year, journalizing the following transactions on page 9. I'm going to fold this quick so I have better visual for you guys. Okay. And classic operation operates in a state with 6% sales tax. The sales invoice source document is abbreviated with an S. Okay, so we do know that sales tax is 6%. Okay, so this right here is 6%. And on September 2nd, we sold merchandise on account to Lenny Stanford, $1,600 plus sales tax for sales invoice 221, right? Right here. Sold merchandise on account to Lenny Stanford, $1,600 plus sales tax. So starting on the first line with the year, and we're in September 2nd. On account to Lenny Stanford. So because it's on account, we need to put his name in here. We may have some sales for cash, and if it's for cash, we don't really care who it is. We just want to keep track of the people that are on account because they owe us money. And this is sales invoice 221. So because we're in a sales journal and it has a special column with sale number, we don't have to put the S in front of it. Okay, then the amount of the merchandise sold was $1,600. So this is where you kind of have to think, don't just automatically start writing numbers in, right? The sales credit is the amount of merchandise. So this is $1,600. Okay, so this is going to be your merchandise. If you want to put a little note there for merchandise. Or your product, however you want to put that. Okay, and actually let's put a little note up here for the sales journal. We're going to use this when we sell merchandise on account, right? And we have those notes from chapter 9 where we know what each journal is for, but just to emphasize that again. Okay, so this is merchandise. Now we've got to figure out the sales tax. So for $1,600 times 6% should be $96. And then 96 plus the 1,600 are $1,696. Okay, and this is what our customer owes us. So again, excuse me, not correct. This plus this equals this. Okay, so really we do this first, this second, and this third. Those are the order that we put those numbers in. Okay. Then our next transaction sold merchandise on account to Washington City Schools for $680. But Washington City Schools is exempt from sales tax. So we don't have to do that calculation. We just put this number is going to be our sale and it's going to be our accounts receivable. Most nonprofits are tax exempt. There's a process to become tax exempt, but most nonprofits are set up that way. Okay, so $680 is our sale. Again, they're tax exempt. We just leave that blank and we put $680 in here for our accounts receivable. And if you want to put a note out here that this is a tax exempt example. Okay. And then our next transaction on the 7th is that we sold merchandise on account to Venice Cafe. And it's sales invoice 223. we sold $2,560 worth of merchandise, and then plus we have to add the sales tax. So 2,560. Got to calculate the sales tax times 6% is 153.60, and then add those two together, 2,560, to get the full amount that they owe us, 2,713.60. Okay, and then the last one for the 15th is sold merchandise on account to Washington City Schools again. $224 for the sales invoice, and the dollar amount was $18.49. And of course, no sales tax, so $18.49 is the same number for our accounts receivable. Okay, so that basically takes care of 10-1. Basically, we added an account up here for our ledger, and we took care of some transactions for 10-1. So 10-2 takes us into posting. So we will need to do the totals and make sure that debits equal credit. So if we look at our instructions here, actually it tells us to post individually first and then prove enroll. I do like to go ahead and do the totals just because if there's a mistake, you find it before you go post. Okay? In real world, you're probably going to post these as you go every couple of days. You don't have to wait till the end to post everything. But since we know we're at the end, we only have a few transactions, I'd say let's go ahead and add them up, make sure it's all equal, and we didn't mess up somewhere so that we don't have to backtrack into our posting. Okay, so we're going to go ahead and total, and then we're going to post individually, and we're going to post the totals. Okay, so we'll make some notes on where we're doing that. So we'll need our, I think it's going to be on the back of this. So I'm going to have to flip back and forth. Okay, so actually here they give us some space to check our debits equal credits in these working papers. So you can use that to make sure that. And then here are our general ledger accounts that we are using, and these are our accounts receivable ledger accounts. So let's put a little note up here. This is the general ledger, just a reminder. Okay, so this is the general ledger. This is the accounts receivable ledger. So this is where we're going to post individually, and then this is where we'll post those totals. All right. All right, so let's get the totals going. Totals are at the last day of the month, September. How many days are in September? September 30th. Okay. Get these added up. 1696 plus 680 plus 2713.60 plus 1849 is going to equal 6. 93860. Okay, 1600 plus 680 plus 2560 plus 1849, 6689. And 96 plus 153.60, 249.60. Okay, so now debits equal credits. Basically, you've got one debit and two credits. So we add these two up. 6689 plus 249.6 should equal 693860. Perfect. Okay. And again, like I said, they're giving you space here, so the accounts receivable debit is 693860. Okay, and then sales credit 6689, and sales tax payable credit 24960. Okay, and then when you, of course you add those up, 693860 equals 693860, and we know we are good. So I have to write better than I